Hey everyone, should be hearing me just a little bit here. If you could give me a thumbs up on Twitter that you are there and hearing me, that would be awesome. Maybe put your hand, raise a hand or something, folks, on Twitter. And we'll get started here in just a couple minutes. We'll let the room fill up. Filling up really quick, actually. So there we go. Awesome. So you probably hear, hopefully, the old music from the YouTube channel. So I'm going to mute out here on Twitter just for a minute while we get the room filled up. We'll get going in just a couple of minutes. Thanks a lot. Quick shout out. Hey, Dr. Baker. Good to see you. Yeah, I miss this old music. It's good to hear this again. So awesome. So everybody heard me on Twitter. No one heard me on YouTube. That's pretty funny. Okay, we'll try this again. I'm like a one-man band, and I'm not very good at it. Okay, so I've got a lot of devices running here. Basically, folks, what I was talking about just now is that the markets are in a very strange and unique position where we are right now. Every day I haven't been able to get my all the database to come up, and so I could talk to you about what the rotation database every day. It kind of wounds me a little bit, but I have to do the broadcast so much later, it just disrupts the entire flow of life. So the way I'm doing now is really good. But we did see a positive rotation into the database. We're up over 79% bullish now on the short term, and we're about to come in just a few hours. We're going to run the intermediates. And that's going to be really, that's going to be interesting because I think we get more traction. I don't think this market's going away. I've been talking about somewhat of a pullback, but really into moving averages. So just while the room's like still filling up, we're getting quite a few people, both on Twitter and on YouTube. So those of you that have the indicators, you have questions, or maybe you don't have them, feel free to go on Twitter on the spaces. I'm at Portfolio Expert. There's no E in the expert, and you can come over there and I can actually talk to a real human being, have a conversation. But we'll go through some things. My plan is to just go through some basic understanding of things. Last time I was up, I did a 5-second chart, which seems completely ridiculous, but it's amazing. I wish we had done this yesterday because the swings yesterday were very significant. There were some good ones early this morning. We saw one of those volatility spikes, and it tends to happen. It's interesting. There's 2 data points that you should be aware of, I would think, from a timing standpoint, is right around the open. If we're trading up big or down big, this morning we're trading up big. Great reversal trade off the open. I caught that thing perfect. It was awesome. So actually got a little bit before the opening, and then it just collapsed down, and there were a couple good trades after that. But what I want to try to do today is bring more orientation into all these things, and kind of a joke with people who are close to me and people around here on the team. I talk about, basically it's almost sometimes like having tomorrow's Wall Street, but maybe tomorrow's Wall Street is just actually, 5 minutes in advance. If you have a 5-minute edge, sometimes it's all the things in the world. And I had a really good talk with one of our institutional clients yesterday, and we were talking about this, and I just shared this, and we'll get into the nitty-gritty rooms probably about where it's going to be. Maybe they'll get a few more. I remember back in the day, we used to get 1,000 live during this time, but this is about the indicators. But I think you'll see some really interesting stuff. But we were talking about just the ability, especially if you're a WaveTech or Portfolio Expert user, if you could move that entry point back a bar and the exit point back a bar, if you could just move 1 bar, the significance of just that little bit of change in timing makes all the difference when you start to accumulate profits, especially when you're looking at a portfolio. So if you were we have some analysis where you have a scatter graph of every trade that goes on in a portfolio, and you start to look at the net impact, we call it the trade impact of a individual trade on the overall portfolio. When you start to see those things, it's really interesting. But all of a sudden, if you can just bring that increment just a little bit better, and this goes to everybody's trading, if you can just change that increment just a slight little bit, little better entry, little better exit, it only has to be 1 bar. 2 bars would be insane, closer to that peak or that bottom. And that's what we all want to do. And some of these techniques, I think if you learn how to use market flow, what I'm going to attempt to show you, I'll probably use market flow today. I'm going to use a typical, the WATARs, we call them, the WaveTech AR on the predictive moving averages. We'll use those, and the perspective that you build, especially if you're in intraday trading. Today, I'm going to stay on kind of an intraday viewpoint of the world. But in the future, I plan on doing, my hope is that I can do one of these every week, and they're more educational in nature, and that will also be able to bring more understanding and more power to you folks. Quite a few of you have these indicators, so I want to make sure we're doing ongoing education as well. So, and this is a fun time for me because Friday's kind of a down day, or the end of the week. I work so hard up starting Sunday through Thursday. Friday's kind of nice and came in casual. So let's go ahead and start looking at some of these things I want to talk about today. Maybe before I'll make a little bit of review when I will bring up the hourly S&P just so we can get a handle on that, take a look at that. But for the most part, what my expectation is, I'm going to go to some short-term charts. I'm going to show you how to set up some of these things as well. And like I said, about 30 minutes after, so about 30 minutes from now, we'll do some Q&A, and we'll have folks and also ask questions on YouTube. So I'll look at both, and we'll try to bring in some more of a impact from what you folks are thinking rather than me talking to myself like I always do. So let's go ahead and take a look at the charts here. Okay, so we've got the hourly chart up here, and right now I get typical setup that you see every night, and I've got a couple others set up, and then we'll build a chart together here as we go. It's always nice to know that the Levat bot got killed. So on Twitter, you guys are still hearing me. You should be able to hear me okay. Just make sure, give me a hands up that everything's working okay here, just so I have an idea of that. So let's, one of the things that just happened actually, and we just got an update about 15 minutes ago on the hourly chart. And for me, just I'm going to set you folks up a little bit on intraday trading. We had something happen here today, and I'm going to expand this out just so we get these. I call them volatility spikes. And you know, the market grid is volatility driven, and I think it gives me a really good understanding of what type of metrics we're likely to see when we see these things. You get, I call them bubbles. You'll see different elements here and this was right off the open this morning. This was it was rallying up. It's perfect. So just let me spread this out a little bit so you can see it. But look at this. We got an RTX sell signal. Literally the hour at 6 a.m. my time, so 9 a.m. this morning, New York. We got that absolute RTX sell signal. Next bar, giant reversal sideways, and and within the context of the market grid. So market grid responds to volatility. So when you get these spikes, you'll see how all of a sudden it broadens out. When we're in a trend, I'll put a cursor here where my cursor is right now. Where the trend is, it tends to tighten up and get narrow and set up channels. So you can kind of see the switching of the trends by just looking at this thing as we go across the board here, and I think also would it be interesting to play this back. But here's how I use this hourly and looking at the PPMs below here, right? So I have PPM 1, 2, 3, and we have the PPM 200 on the screen right now. So what I'm looking at is we start to get this volatility. Now you can see the algos are pointing down that we should come down towards a second derivative on PPM 1. Let me get a drawing tool up here because this is really educational type venue that I'm putting together here. 1 second. So here's the RTX sell signal right there. And then when we get this volatility bubble right here, then what you should see is a normalization in these indicators. So what happens is over on the right here, you see projected normal. It starts to flatten out again. So you get these bubbles followed by you get the bubbles followed by the stability, and they're expanding all the time. And typically the bubbles or the expansions happen around some kind of news event or maybe the open. And I was mentioning 2 points that you should watch. If you're up, if you're in the U.S. and you're even up very early in New York time, but right around London, you'll see these type of events as well. And there was a minor one last night in London, but this morning was the big one. So what's being forecasted right now is that the PPMs are suggesting right now that we're going to get some downward movement here, and we're trading just about at last hour's high. And so what we can do with this information, we're going to start looking maybe at some sort of negative rotation to happen. So I'm not sure exactly which charts I'm going to bring up here next, but let me just click on a couple of these tabs so that I can bring this up. So this is, okay, this is the 5 second bar. And I was talking with a friend of mine the other day and said, it seems ridiculous to look at this, but I have figured out this has been a great research tool for me to understand the characteristics of the 200 period moving average. Now this is 200 period. The red line on this chart is the 200 period of the 5 second chart, right? So what's interesting about this, I'm just running the WaveTech 200 on this screen along with this, and I have caught some really good turnarounds. When the 200 starts to turn negative, you start to see it decline and you roll over. This is your primary trend line, and it's interesting. I've been able to catch these lows here by just going on. And what I'm going to try to do potentially here in a few minutes, if it sets up, we get it set up, I'll see if I can bring up a trade, and maybe we can we can actually execute a trade. I'm not sure if that's going to work out, but for right now. But this is that 5 second chart. It seems, like I said, it seems somewhat ridiculous, but what I found is this trend will stay alive as long as the 200 is positive. And you see it starting to roll over. You can see the indicator starting to roll. So you can be looking to get short on an intraday trade here. And then you would go to maybe this is a 5 minute graph, and you start to look for some type of turnaround on this graph. So this is kind of got the same thing on here. I've got a couple elements, and I'm going to go through these one by one here in a second. And then, so these three charts, 5 second, 5 minute, has just been amazing. But the setup here is that the hourly, we're looking for a turnaround on the hourly, because the algos are suggesting we're going to potentially sell off into the close today. This final spike low is not, we're looking here coming into the close. It looks like we should see some softness. And the way that a couple things, the way the configuration of the moving averages on hourly are flattening, and that stabilization that I was talking about, we could hover around here, but it still makes for a pretty decent move for that range. Because right now we're looking at a range of about 45.78, and the bottom end of the range is about 71, maybe 68, down here just a little bit. That is kind of your target range if you're an intraday trader. So you want to start looking for something that tells you that there might be a top here. And I was just talking, see, we're already challenging the 200 on this 5 seconds. So I'll try to expand this out so we can watch this just a little bit. And you can see it roll. Look at how steep the PPM 200 is starting to decline. We just got fib targets on the downside. So it's amazing all this stuff works on this type of increment. But if you're a day trader, when this thing started to roll up here, you're looking for this sell right in here, especially take out these moving averages. We could get more intricate and come over here to the 5 minute. You can see we're peaking out here on this chart. I'm going to add in just a couple things here. First of all, I'm going to take off the 200, and I'm just going to go into the indicators, go to the invite onlys, and let's put on the typical configuration that we look at. And then we can kind of break this down just a little bit more. Okay, so what we're seeing here is possible challenge of the 10 period moving average is still rising. So we're not in that point where we'd want to sell this, even though there was a good scalp. If we go back to this 5 second, a little mini scalp, this is not probably the rollover yet. We're holding the 200. You see the 200 is starting to stabilize here. Let's go back to the 5. I'll just show you how to correlate this. So the upward slope here on that 5 minute is going to be dominant. So you're not going to be looking at shorting this until we get a little bit further into this curve here. So we'll just kind of watch this, but I want you to understand the setup. And I'm going to show you another indicator while we're waiting for this, so you can actually look at some of the items that I try to look at intraday. So here's the indicators I have on here. Let me bring down the list over here on the far left. They're kind of hard to read, but we've got all of we'll call them WaveTech forecasts. So we get all of the 10, 21, 40, 200 forecasts. That's what you're seeing over here on the far side, looking out 50 bars. So just to give us some kind of expected slope that is likely to happen. You can see we're actually turning red on this 5. So we're most likely going to test this 10-period moving average, but we should stay above it for right now. So we could trade around here, but let's just continue to get some perspective. We're hovering around the 200 on the 5 second chart. There's something that I put on here that I found really interesting. The STX buy signal counter, you'll see triangles with numbers here. And on a 5 minute chart, I've been using the setting. I'm going to bring up the setting so you can see it. I've been using the setting of 2. And what I use that for is when I get a clean 2 that's at a bottom end of a range. You can see sometimes you get there's a 2 right here. I'm going to try to draw this so I don't lose you folks, okay? Let's just try to draw this in real quick. So right here's the 2, but what's going on here is you got the PPMs are negative, rolling downs. So you don't want to buy that 2. What you want to do is find a 2 that correlates with bottoming PPMs. So I'm looking over, in this case, we got a series of these. So you're just in these downtrends. So you want to find a clean 2 that's isolated by itself. I'm going to show you, there's one on the page here where I'll show you where this is at. Right here is a perfect one that so we had the 2 triangle right here on the page, and you see the opposite. All of the PPMs are turning up, so you're getting confirmation across the board. You're even getting the 200, and everything clicks in. The 200, believe it or not, even though it's a longer moving average, is actually an amazing indicator to find trades. The other day, I was able to capture a really good swing trade just by using the 200, and it was on this same chart on the 5 minute. Now, somebody I see commenting that there's a RTX on the 15 minute. So let's go there. Yeah, look at that. There's your RTX on the 5th. Was it an RTX? So 45.83. Let's see here, 40. Let me get these numbers real quick. We'll take a look at it. 45.77, and the close for that period, 45.77. So pretty much right on it. So not a real clean RTX close. But look at what's happening here on the 15 minutes, also showing those negative rollovers. And so you can start breaking these things down by increments. Everybody has different increments. I use the hourly to give me a big perspective. Then I'll use the 5 minute and the 1 minute. And now I've evolved into this 5 second chart. Okay, so if we come back over here, look at this. We held at 200. And this is what I was saying on the 5 minute a minute ago. You're going to see that it should bounce from here. And I'll talk about these numbers here, the trend projection. I'm going to offset these just a bit more here. Okay, so we'll keep an eye on that. This is 15, so let's go back to the 5. And look at this. Here's still that positive bias on the 5-minute. So if we're trying to catch this potential hourly move, sell-off into the close, right now we're 2.5 hours from the close. So we're going to get another hourly update. That's going to help us. And if you're really patient watching for this stuff, you can figure out we got an outside bar in a 5-minute, but that slope is still there. And it looks like we're like positive slope here into 10:45 my time. So that's almost another 15 minutes. This positive slope is likely to continue. So, but this is when you're looking at these things, trying to determine, if going all the way back over here to this hourly concept, that when the hourly update happens, if we get a downtick, that's where everything's going to happen. And of course, we'll be here for the rest of the trading session. So I want you to just kind of understand some of these basics of what's going on with the indicators. And right now, I didn't bring this up, but there's a lot of indicators, and I need like about 10 hours to be able to show you folks exactly all of these things that we have produced. One of these days, I'll get into the reverse scalp trader, and then we'll get into some of these other indicators. But like I said, I'm going to go through this step by step as far as things go on. So back to the 5-second, we're still seeing a bottoming. Look how we held that 200. We never got negative on the 200. We went to flat, you see, but it still has that upward slope. And what I've seen multiple times, like you literally, when this thing turned, you can see my cursor over in the far left, when this thing turned and that trend on that 200 start, that is one of the classic trends. And what happens, and just like anything, when we get extended too far above or below the 200, it wants to correct back, correct back to that number and come back into that range. So that is also important to understand, that once it's kind of like getting out of balance. It gets a standard deviation plus, and sometimes they get 2 standard devs over, and then it will come back. It will come back into that moving average. We hover along it, and now we're still seeing the algos are still somewhat positive here. And I want to show you, talk about this just a little bit more. Like I said, it seems I don't know. You have to understand, I'm an ex-floor trader, so seeing tick by tick, seeing how this thing formulates. The 50-bar forecast that you're seeing here on the 5-second chart is about 3 minutes. And it's forecasting that we're going to stay somewhat in this range right now, between 80 and around 80, 81, 81 and a half. So all of a sudden we come into this stable range. And after the initial moves this morning, we've actually seen some of the volatility collapse down and some choppiness. But this is what for me, folks, and this is why I'm sharing this, is this brings in a tremendous amount of understanding of that moment to moment. Especially, this helps you ultimately position yourself, get a fine-tune net. I started off talking about the concept that you could move that entry price one bar closer to the bottom, or the exit one bar closer to a peak that you're trading, and that makes all the difference. In fact, it changes all the probabilities and everything, and starts to slant the odds even more in your favor. And I'm sure most of you know, but everything you do in trading, it's all about probability. So you have to understand, what are the probabilities. So right now, the forecast is starting to try to change a little bit to the upside, a bias to the upside. We're seeing that WaveTech 200 stabilize on the 5 seconds. So we come back over here, look at the 5 minutes, still climbing that slope. And so if anything, you could have went long there, but if I kind of tied into the concept here on the hourly chart. If I can find that right here, is that we're going to get a peak, and we're coming up right now. If we look at the values over here, 45.80 is R3 on the hourly. So we're coming into resistance levels on the hourly chart. We're seeing going back, if you follow me all the way from what we were talking about, we're going back to where that volatility is going to start to collapse in, and then we're going to come back in toward these moving averages. And the trade will be is locating the basic peak values that are coming out of this particular situation. So let's go back. Look at the 5-second. It's still projecting higher prices. The 200 still up. So in theory, I'm going to just go back. When this was the beginning of the trend, this 200 is still in that upward slope. That has been your trend line going back to 10 o'clock this morning when prices were at 45.70, and now here we are at 82. So 12 handles. This trend was identified by using a 5-second chart. So I think you're going to need the real time and probably the premium service level on TradingView to be able to do this stuff. So I see a couple questions. Yeah. So. But I see some comments here, folks, and it's good that you're buying into the scenario, but you got to wait for the right entry point to get there. And right now, we still have this upward slope, and what we want to watch down below here, this 200, when we start to get a signal that this 200 is going to roll, and we're pretty darn close. Let's come back over here. Look at this. Now here we are. We're finally at the peak of the PPMs that look like PPM 1 and 2 are about to signal a bit of a rollover. So you probably can get short in here. As everybody says on these things, not financial advice, but you probably can get short up here. And we should start to see, look at the slope that's setting up on PPM 1. So that this should be very close to what we were playing. There'll be support at the 10 on the 5-minute. And certainly some of you may be using 15. But the main thing I'm looking at here is this hourly chart's up at S3, and it's starting to get a little touchy there. I wish we could just stay on it and watch this. This is stuff we used to do in the live room, is trying to track, where those entry points are and maybe a little more active trading. But this is really the type of thought process that you go through and how to understand what these different things are, how the setups are correlating together. I mean, seriously, we could spend weeks and days, and I've had a lot of folks reaching out to me. They want me to start the live room up again. It's not going to be a possibility, just some of the things that I have going on right now. But a couple things here. We're back to hourly chart. We do have fib targets still down here to look at as well. We're looking at 45.53. That would be like a 20 handle sell-off from here, almost 30. That's a pretty big move down. I suspect we probably come back in to where these moving averages are all starting to get into the exact levels around this 45.75, maybe 45.70. And that's a pretty decent move. Looks like we still have a bit of a bid going on here yet. There's still a bid here. This slope is still there, folks. So it's just now peaking. So we start to roll over. Once this peaks, we should, in the next 15, 20 minutes, we should be able to test the 10, maybe get into these moving averages and start to test down. But these lower fib targets are still valid, so that's a good thing. So we're looking at, like I said, these are rough numbers: 69, 64, and 61. Yeah, just real quick, answering a question or two here. Trader SLA, I'm not sure what service level that you have to have to get to these 5-second charts. I'm just telling you, if you're sitting here all day and you can start to look at some of this stuff and see how it correlates, it's incredibly powerful from that standpoint, because you can really fine tune this thing. I was using 1 minute for like ever, okay? If I brought up my TradeStation view, you'd see I still have the 1.5 there, but this, I've been able to fine tune things really, really tight. Now I do have the, I also right now have the web flow on the page as well. And let's do this, since basically what we're seeing here, folks, and this is another key point, is the WTARs, the forecasting. What's causing these lines to be forecast are the moving average, are the ppm. So you can pretty much, and we're going to go there, and we're going to drop these ppms off right now, and we're just going with a cleaner look so you can see exactly what's going on here. So I'm sure the Twitter folks are probably getting this feed live, and you're 20 seconds delayed on YouTube, so you might want to turn the Twitter sound off until I'll let you know when we're ready for Q&A. Yeah, I agree with somebody just said that they do have like a Black Friday, and that is the day to do that for sure. You can get, I think, the whole year super cheap at a pro level. Yeah, so let's just stay here for a minute, and I'll answer a couple questions. Ryan, I'll go to your question here in just a minute. But here we are. So now we've cleaned this up, so we got a little cleaner look, and we could go up here and throw on, we could come up here and put the trend probability. I want to talk about that, because these things are sometimes a little confusing, and they're stacked in order of the hierarchy 10, 21, 40. And sometimes when these averages start to crisscross, you see a couple of them together, and you're like, which one's which? And that is that's the hard part, is you just got to see which one's on the top value at the time, and so they're stacked relative to that. So and right now we're seeing a probability build for it to be penetrated. So if it says it's 16%, that means there's 85, we'll just round it off, 85% probability it will stay above that average. We're starting to see some vulnerability come into this 10, even though there's still a bid on this 5 minutes, still punching out the highs. There's still a bid in here, and it's still following that angle of attack. You see, it just it wants to climb up. What we'd be looking for initially is a move sideways into the moving average, and then start to come into this rollover and start to see things set up, because right now it's suggesting that it's almost 2 hours before it's showing the rollover. And this forecast will be updating every time there's a new tick. Every once in a while you'll see they'll reforecast, and each tick is being into that coefficient number and calculating it. Yeah, and this is exactly, RJ, what you're talking about. They're walking this thing up right now. You do not want to get in the middle of this bid right now, and it's still showing that. Let's go back to the 5 minute. Look, it's just climbing, and we're starting to get maybe some signs here. Let's see what this is. Yeah, see, even though this ppm 200 on the 5 second, it's still positive, even though it's showing some. So maybe it looks like there's a forecast of coming in for a test of the 200. We're starting to get maybe a little vulnerable here, but that path is still looking forward is positive slope, and that's, you have to be careful. And one of the things that I would say RJ's referencing here is that what happens is there's enough bids and players, they just kind of keep coming. Back in back in the day, floor trading days, I can tell you, we used to have the stampedes, but they were limited to where they go. Sometimes these stampedes will stay for a day or 2 days or 3 days. It just doesn't end where you think it's going to end. There always seems to be more sometimes. And one of the things we do have, let me go back to 5 minutes. So we don't have any here we're finally getting a little reversal on the 5. It's vulnerable up here, folks. I'm just telling you, if we go back here, it's starting. Look, we touched the 200. We're starting this next phase that happens on this WaveTech 200 on this will tell us where the short is. Okay. So it hasn't been terribly painful from that standpoint. I'm not, this is something I was talking to an associate this morning about. I'm not a super power user of TradingView. There's a couple people I've seen on the Discord channel that are, I have some really cool setups I wish I knew how to do. And I think there's a way to share those setups with folks. And so that's something I'm going to try to do in the Discord community to see if that's possible. I'm going to go back to this 5-minute chart. Yeah, see, we're finally getting the first reversal, first red bar, and look at that. There, we just got the update, and let's bring up the let's go to indicators and let's bring up let's put PPM. Let's just put the 3 of them on here. So you can see this is the rollover. This right. Where my cursor is right now, that was the final bar, and everything is starting to roll over. We talked about that, about 15 minutes ago. So here we are. Should get a test of the 10. Looks like this is probably the place where we finally we got a little reversal, and you probably sell anything 82 or better if you can get it, and then probably walk it down into at least these moving averages into 77, maybe start to see that happen. And so let's and that's something else, folks. We'll have to do this in Discord, but I would like to maybe embrace some of you folks that are way better users of TradingView than me. You can teach me a lot. I mean, I know the indicators, I know how to read this stuff, but there's some pretty cool displays that maybe we can share. So let's go all the way back to that hourly chart. Look, we hit. So this is why I'm disappointed. I'm trying to figure out, to my right, you folks see that when I come on, I have 6-headed computer. If I wouldn't do anything, if I could find a way to show you what it's like to trade on these big monitors. I got 32-inch monitors, 6 of them. And on that array, it's just so easy to sit back and see all this stuff. So I have the 5 second, I got the 5 minute, I got all the array across those screens, and I can just sit there. I literally have a desk. I'm set back from the screens about 6-8 feet. I have a virtual mouse I can run. There's something called Synergy. You can run. I run both of my boxes with one mouse, so I can trade on both computers and do everything on one. But I would love for you folks to see what that view is, because I just feel like I'm constrained bouncing around on these tabs. And if I do a multi setup on this, what's going to end up happening is everything's so small you're not going to be able to see it anyway. So I'm going to try to figure that out. We were looking into some of those possibilities. So let's do this. I've been talking for a while. I've answered a few questions. I think what I want to do is see if we can get some folks, maybe some of you over on Twitter. Maybe you can come up and raise your hand if you have a question. And I think Tommy's got a question. So let's go to Twitter here for a minute, folks. Let me just, add him in. Tommy, you should be able to come up.
Hey, Bob. How you doing?
Good, man.
It's great to have you on Twitter Spaces again.
Yeah, I know. I got Baker on there. He and I need to talk. We need to do another Twitter Space. But go ahead, Tom.
Yeah, it's a good thing. Making money as we speak.
There you go.
So, listen, just a clarifying question here. You brought up as it relates to the 1 minute and 5 minute in scalping.
Yep.
You brought up the 5 second.
Yep.
So as far as I can tell, you have the 200 second moving up and down with the fib ratio on, and that's it. When it crosses above the 200, is that the signal for the 1 minute to give you an advantage into buying, or if it crosses below into selling? Is that kind of
a good question
here?
You're watching on YouTube as well, right?
Yes.
Okay, so I've got my cursor. It's going to be 20-second delayed from where we're at, but
yep.
When you start to, just like what we were watching, I'll show you what's happening right now. We're seeing that rollover the 200, and I just was looking at it. We're starting to get a little downward pressure, not a lot, but what you want to, when this thing gets really out of balance, this isn't a super good example, but it is when you're just like when we were way above the 200 on the, and we're talking 5 second chart. Okay.
Yes.
When it gets down right now where it's at, what happens is you start to see this bottoming formation, and the PPMs are starting to say this curve is going to start to slope up, and you can wait. I have actually got trades off into this trough right here, right? So you can do like I've always suggested that you do multiple increments, like if you're trading 3 contracts, you'd buy one here, you'd buy one. When you start to see the PPM 200 here start to expand, and now you got confidence, and then you can when it gets to an extreme, you can trade out of one, keep one. I always try to get everybody to trade. The best scenario is to trade with 3 entry points on every trade. So you get the trough trade, you get the breakout trade, and then you get a confirmation trade, and then that first trade you put on. Soon as you start to hit some resistance, you take profits on that first trade out, right? You want to take profits, because now what that does is it starts to eliminate any possibility of a loss on the trade. So what you're taking,
just like you said in the trading room.
Yeah, just like in the trading room, and you see me do that. And so what happens is once you do that, now your confidence, you can stay with these lines, and sometimes I've got such a hair trigger on everything. I'm out. I can't. I'm a scalper by trade, so it's hard to keep me in a trade. But I've been working on some techniques, even after all these years, to be able to stay with these, and by getting that on like that. In the hourly chart, there's been some really good chart. So I'm going to go over to the hourly, and we traded up to the extreme. So there's still some residual. We don't get the hourly update until 9 minutes from now, right? And I guess we went so long into this, we'll just continue to watch kind of this configuration to see if we get a bounce off so we went to the extreme matter of fact, we went to STX. So that's the extreme of what's RTX. I always do that. I'm dyslexic, so it's good and bad. So anyway, once we get to that extreme, then we should start to come back into this pattern just naturally at some stage. So this trade should actually come in pretty good. But if we go back to the 5 real quick, you'll see the 5 is still climbing that angle. So we came back in. We still have not penetrated first derivative. And we still have, we still ways away. I mean, literally like another 15, 20 minutes. This thing, I think RJ or somebody was saying that, this thing it keeps extending, and there's still a bit in here. So a lot of this might be that there's a lot of folks looking to cover. They're probably disappointed that the market's trading like it is right now, thinking that they had the big trade on yesterday, so, but maybe that's psychology. But Anyway, but this angle is still going. We now have like 30. It's trying to, if you look at the probability here, we're around 36% on the 10-period moving average right now. So typically that gets above 40, it gets very vulnerable. So it's not like you have to. So I've seen it sometimes where it's 90%, right? So
Right.
but it's pretty much around 40 plus, it starts to be vulnerable to a penetration. So it's just a matter of getting a feel for these things, and depending on what things you're looking at there.
Okay. And listen, well, we're on the 5 minute there. The trend probability. This morning it had that whole series. 3, 4, 5, and then a 6. I took the 6 as an opportunity to buy. But you're saying that you want to find an isolated like 2
on a 5-minute chart. But listen, this is the key. If and that's why on Discord I want to really get that up to speed, because we're all going to find maybe on Tesla it's a 4, on a S, on a ES it might be a 2. So you need what I do typically is tune it in. Maybe today, because so those isolated 2s are just really good if they're in conjunction with some other stuff, right?
Okay.
On the S&P like 500, right? If you go into ES and do daily, right, the magic number there is 5. And the last time we had a 5 was like September 31st of last year. Okay. It marked the major bottom. And actually an associate of mine came up with this STX counter. A guy who worked for me for about 7 years. He was the one I've been rattling on about STX, RTX stuff forever and ever, right? And he's like, hey, I checked something out and I put this spreadsheet together, and he's the one that came up with it. He goes, look at this. If you get 5 of these things, it's picked this low, this low, this low. It's crazy. All the stuff, if you put a 5 up there, you'll see it, and go through some historical data on the S&P. So what you want to do on any of these charts is to find what magic number it is. Maybe it's a 7, and you start to mark those, and you just wait for the 7s. And especially they need to be, maybe there's more 5s and 7s, and 5's probably a good number. Try to find the number where, okay, now all I use this for is that place to focus in on the, on that window of time. So it's saying, hey, there's something going here. We got the STX stuff. We got everything right on the money. And now we got PPMs. We got all these other confirmations. And in the case of like going back to last year, in October, we started getting a lot of traction on the database. All of a sudden, literally thousands of stocks started to come in. And all of a sudden we're 20, because we were deep in cash last year, most of 22, right? So when we came into the fall, all of a sudden we went from, nothing to 22 to 30. All of a sudden we're hitting magic marks at 40 coming in October, November. And, here we are printing, close to 4,600. So, but that STX number was to be used with a lot to confirm with other things. So if you get multiple things, I haven't talked about them a lot on the YouTube channel, but I always look for clusters of numbers. So, okay, we got this 2 thing is good. We've got, maybe crossovers, or we're getting breakouts on the PPMs where they're crossing first, second derivative. Everything looks like it's going to turn. So look at this. We're still hunkering on that 200.
Yeah, and we're coming up on the hour, so a couple more minutes. Yeah,
so this will be fun to watch. To see.
All right.
Yeah,
well, listen, I appreciate your time, Bob.
Yeah, thank you.
Thank you for the discount. Very generous.
Oh yeah, thank you. It's my pleasure, actually. All right, thanks a lot. Bye now.
All right, take care. Bye.
Yeah, bye. Okay, Paul is going to be next. Okay, Paul, you should unmute down at the bottom, and you're ready to roll. Not hearing you if you're talking. try unmuting and yeah. I'll tell you what, I'll take you down and bring you back up. Okay, hang on a second here. Yeah, it's interesting. It's asking me to add you as speaker, and I already have. So that's not. You know what I would do? Yeah, that's what I was going to tell him to do. All right, Paul, let me try it again. I sent you an invite to speak. See if that works. Yeah, so while Paul's trying to get in there, we're still seeing this 200 be a dominant trend line. There we go.
Hi, Bob. How's it going?
Good, man. How you doing?
Yeah, very well, thanks. I just had a quick question regarding the hourly PPMs and the 30-minute PPMs.
Okay.
If you have a look now, they kind of contradict each other in terms of like what the 30-minute is predicting an upwards trajectory and the hourly a negative trajectory. Why is that?
Just different time increments. Let's put them up and take a look at it, Paul, so I can answer it better. But yeah, so it's just like a daily could be negative and the weekly positive. Okay. When you're looking at it like a different time series, those increments, there's little different measurements, and that's why I went completely rogue and went down to a 5-second chart, right? Trying to figure out that, okay? But you want to find some increment of time that you can start to target exactly what what you're trying to find. So let's just go like with the hourly, and I'm going to bring that up and see here. Yeah, so it's like vertical, right? It's completely opposite. And look at this angle of attack. I mean, this thing, it's like stonks only go up. What can I say? But yeah, so when you get something like that, that is contradictory. But what I would suggest is that what's the value? Okay, this is a key point. So right now, that value of that is actually negative. PPM1's negative. Okay.
On the 30-minute.
Yes, on the 30 minutes.
Yeah. Okay.
So you're a little bit lagged if you're watching on YouTube. But what you're seeing is even when it does project that it's going to get more positive. But you can see we're already coming in just a little bit. With it being flat like that, it probably, if it was really a big breakout and we were positive already, but it's not. So it's really just a flat moving average. It's not. So the theory, just real quick, on this angle of attack is there is no angle. It's flat. So the less let me complete this thought and then you can reply. But the less of that angle, the probability is that you can trade on either side of that value. Okay, so right now it's there. The projection, the actual value is zero. The projection, you see what I'm saying? And then so that's that. In the end, it's like, what is that current value, right? So then we go to the hourly, and the hourly is actually positive, 0.13.
Yeah.
Okay. And what the hourly, and we're already getting a little bit of a red bar in this hourly, is what the hourly saying is, it's 0.13, and you need approximately in this range, 0.15 is enough for that value of that 10-period moving average to represent support. Okay, so that number, it's coming down pretty hard as we're talking about it.
Yeah, it is. Yeah.
So here down to 80. I was talking about 77. So what we're likely to do in this scenario is start to test those values. And I hate when I hear this ring because TradeStation's been crashing on me. I just heard not a friendly sound on my computer. But so you can see we're already 79.80. So let me bring this. Let's go over here. So I was looking at, see this, that's what I was saying. If you'll see it here in about 20 seconds, but we rolled through that 200 and the 200 is now flat and trying to go negative. So if that trend on this 200 rolls, we're going to get exactly what I was talking about earlier, is that turn down in those values are starting to project that at least we're going to come down, test those averages, maybe come down even further. And for whatever reason, folks, everybody listening, is that when those turnarounds happen, I played a lot of those where you literally get the peak and the forecast, the next bar is down. You just keep the stops tight, but I've caught some amazing trades just off of that. And that's what I was seeing on the hourly. And the hourly's just been deadly on some of these turnarounds. And all it means, doesn't mean like there's big collapse coming, but it does mean that we're going to come back into those values. And that's what I was talking about a little bit ago. So kind of getting into walking through this process that's going on. So now we're actually seeing this thing start to come down. We're printing all the way 78. 77 was kind of the target from 82 at the time, right? Let's go back over here and look at this. We're busted through the 10-period moving average. You'll see it in a minute. We've got, let me do something here. What we've got going is we're trading almost down to the 21 already on that 5. And if you look, all the 5-minute was showing that peak rollover, and we crossed to the first derivative. Everything's rolling now. So the target here is now the 200 on the 5-minute. So that's going to be your support line. That's probably going to mean something, and that's 77. That's the right number. Let me just look here. 75, 25.25, right in that range. So, but that was what was being anticipated here, is that we would see that peak on that hourly, and we just got the hourly 5 minutes ago. We got that update, and it was like on cue that it just rolled over.
Yeah, that hourly's turned right down now, right?
Yeah. Let's go take a look at it here. Yeah, you can see it. It's cut through and it's down. Yeah, exactly, and that's what it was. That was what. And look, we're already into these averages already, and that's all we were looking for on a trade like this. We're not looking for some grandiose trade that we're never going to have to work again.
Yeah.
We're just looking at the trade where we're actually going to trade back into these values where the support is. And there was a nice trade. We're trading 76, so we were trading 82, 6 handles. We're probably heading for 75, 73. But it looks like, if you look here, you see that those PPMs are rolling pretty hard, and now you get the PPM 2 and PPM 3, which is the 40-period moving average, never really got any big traction on the upside. So it's still negative. It's slightly negative. So you have those trend pressures laying around, and one of these days I'll be able to articulate clearly on all these forces that come into understanding moving averages. They're so powerful. They don't have to be weighted. I hate the idea that today's value is more important than yesterday. I don't like weighting things. I just like I'm an old school guy, been around a long time. Just like, all I need to know is where these values are. And it doesn't matter, actually, even if you are into exponential or weighted averages of any sort, or even VWAPs or whatever, right? What you just need to understand the characteristics of those things that you watch. So there's Bob's way, and there's a lot of other ways. But what I've just focused on these averages, and I don't care what they are. You just need to know them so intimately, you know what to expect. That's when I just go into this little rant for the benefit of everybody, is that this is where I talk about there's different levels of competence. It's the incompetent, that he doesn't know, right? Then you go, oh, I'm a competent, I don't know that I don't know. And then there's the next level where it takes all my focus to to make concepts and float on everything. And then you get to the final level where you're just like an athlete. You're in the zone where you just feel everything and you just see it and it happens and you respond to it. It's so intuitive that it goes crazy. I started, just a quick story. I started when I went to the Pacific Options Exchange in 1991. And I remember watching this guy who was the biggest trader on the floor. And I thought he was a lunatic. I thought, what is he doing? How could he possibly be making any money? Okay. And he was huge trader. And I'm just like, but what it was, he would go through his numbers. He had an intuitive sense of what was going on. It was fascinating. He was probably trading 20 or 30 stocks. We were on the floor and he had clerks running around, when you had to run it with a piece of paper to trade back in those days. It was pretty amazing what he did, but it was all that intuitive sense. And when you get to that level where you're the unconscious competent, where you don't even have to think anymore, I don't care what it is, if techniques that you may pick up from what I'm doing, that's all I'm trying to bring out to the community is these tools are really powerful, and some of you are going to learn how to use them better than I do. I've just been locked into some of these aspects, and matter of fact, because of this community, we have these artificial, the intelligence with the AR, with the auto regression stuff has been brilliant. That came out of some people I met on this channel and that are in Germany. And I'm grateful for them because this changed how we can see things. I used to, in my mind, see this, but now I can see it virtually, like trying to anticipate what that next move in. Sorry to get in a long answer there, but I just feel like, when you do something enough over and over again, you get that proficient with things.
Yeah, thank you for clarifying that, Bob. And also, just one more question. How did you, with the technology you've created, how did you set down the path of focus on the moving averages, and is there any kind of further reading or any kind of basic reading you could recommend in terms of learning about those things from a quantitative perspective?
I have not been very good with my Substack account, but there's a couple articles that I wrote. This journey started back in around 1982, and just really quickly, I can summarize that. I think I'll try not to go rambling on, but but what happened was we were trying to, like everybody, just trying to figure out what direction the market was going in, where to buy and sell, and everybody used moving averages has been the most popular thing in the world. And I can tell you, up until about 3 years ago, I never looked at a 200-day moving average ever, but I did look at a 10-week moving average, which is very similar to that same value. So that number actually existed in my analysis, but it was never acknowledged at the level it is now. And I've embraced the 200, and I have to. I was just talking to an associate this morning. I have to find a way to bring some of the things that I've figured out, and I've tried to say that today, is that what we're doing and understanding how this 200 works is that trend that I just went through. And I love that 5-second chart because it's so educational to go through a day and just look at and interpret and get a feel for these things. So you're getting a new bar every 5 seconds. So you got a lot of it really gets the gears turning. And then when you go to a 1-minute chart, it's like super slow motion. Okay. But anyway, what happened in the progression was we just started researching things, and this moving average thing came up, and we started with the 21. But what happened was we started to look like, well, if we had the trends tend to look like there's different levels of trends. So we came up with 3 levels of trend, and then we started identifying those. And I worked with this guy, Dr. Bill Prater, and Bill said one day, he goes, "We don't have a playbook." Okay, I lived in San Francisco Bay Area. and Joe Montana was quarterback and Super Bowl champions, all that. And we looked at Joe Walsh, the coach on the side. He always had a playbook. So we started developing actual rules around our thoughts and the things we observed. And it just went from there after year. And finally, technology expanded, and we started to take these ideas and put them into logic and try to emulate actual trades that we did into logic. And that was around 1990, 91, when things started to come into that range. And I've just kind of been on that path for a long time. And we went from doing that to actually even looking at portfolio analysis and how to allocate assets. One of my old partners came up with this great, amazing routine. We call it now dynamic profit harvesting. And I learned it from, learned that concept from people I used to deal with in London. And they used to call it top slicing. And we took the top slicing concept. I won't go through this 30,000 foot view, right? But the top slicing was just how to take money off trades that were working really good and put that money into new ideas that had new probabilities and how to accelerate the growth of capital. So WaveTech, Portfolio Expert, has that technique, those techniques in there. So when things are good and you have the right stocks in WaveTech or something, they get really, really good. I mean, in 2020, we had a lot of 150+% returns that year. And that was because of this allocation and how it was doing. And it was the most unique, special time ever in history to make money. I'm not sure we'll ever see that again. But the point is that those techniques were being used to do that. So I guess there's a book out there that we used on walk forward analysis. Trying to think of my bookcase is too far away to tell you, but I'll try to put some stuff in the description of today's video. But there's just so much, man. I wish where are you at? Where are you located?
I'm in the UK.
Okay, so I'm possibly going to be doing an event in the UK in November. In London. Right. I've got about 4 days. I think I'm going to have to be in London for about 4 days, and then I'm off to Switzerland after that. Actually, Milan and then Switzerland. But what I'm thinking about doing a meet and greet. But I'm also doing City College of London.
UCL.
Yep.
Yeah.
Dr. George Namur is a very close friend, and next spring I'm going to do a potentially a multi-day class at the university.
Okay.
Yeah. So I'm pretty excited about that. I asked George if I can get an honorary doctorate. All he said was nice try. But but anyway, but yeah. So got some really cool stuff planned. But that's kind of the basis, and we don't emphasize, we did for a while, we haven't emphasized WaveTech and Portfolio Expert enough for certain types of investors. It's not a trading tool. I mean, they're management tools, and we've got, we have around 15 billion running in it right now. And we're doing some things that are going to up those numbers quite a bit, I think, very soon. And that's part of my trip to London, actually, is for the management side. But anyway, a long answer, not as long as it could have been, though. I could have went for a while.
Sounds like quite the rabbit hole. But,
yeah, it is.
You answering it.
I can stick my foot in those pretty easily. But yeah, so I think if you were I used to do a class called How to Become a High Percentage Trader, and really it wasn't about the percents. It was more about how to get into that understanding and start to map out things. So I always quote this. It was a quote of to be. If you look up the word, the old definition I looked at many years ago in like Webster's or something, as a definition of discipline, and it was to become adherent to a state of order or a set of rules to bring about a desired result. So if you don't have a state of order, you don't have a set of rules, you're never going to be successful at trading, ever.
Yeah.
And I know people always say, you know, trade your plan, all that crap. It's not that easy to do. And, you know, and
tell me about it.
I spent a lifetime. I've been doing this a long time, but I was very, very fortunate that in the early 90s to have some of the thoughts, and I've been very fortunate with the people that have been attracted in my life that have, in fact, then given me some guidance and crazy thoughts. So I'm a bit of a mad scientist, but the, you know, I think if you get down that, it's hard. And you have to understand one other thing is all of the models and everything came from actual practical use of techniques in the markets. They didn't come from just math. The math was there, but if you try to create things through math, it seems to be difficult. And I just share one more thing for everybody listening, because one of the things that happened, like if you look at WaveTech or Portfolio Expert, we have something called an ER ratio, which is an effectiveness ratio. And I figured out something that you and I are never going to figure out the perfect trading system ever, okay? But what I did was this effectiveness ratio is we applied how effective it was by the percent accuracy by the win-loss ratio. When the win-loss ratio is how much I make on each individual trade versus how much I lose on a trade, right? That ratio, if it's above 2.5, you only have to be 40% of the time you have to be right, and you'll make money. The metric was 50%. Was 50% of the time. If you're right 50% of the time, you make $2 for every dollar you win. You lose 5, you make 10. You end up with 5 more dollars than you started with. That was the basic concept. And so we took that concept and applied it. So in some, we have stocks and different instruments out there maybe are only 30% right, but the win-loss ratios are 4 and 5 to 1. And so now you could be wrong 6 times but make money because you're making bank when you're getting them right. And I think that is probably one of the biggest things that happens out of understanding that. So
it's kind of like implied odds in poker, right?
Yeah, exactly. Yeah. It's that a lot of stuff we do that I come up with is gaming theory. Okay. And if you understand, man, I could go on for hours about this because it's my path. And I would just tell you that once upon a time, I lived in Lake Tahoe in a gambling town.
Great place.
Okay. I lived in, not in South Lake, but in North Shore. And I went to a local casino and on the quarter machine and put credits on and point and figured a slot machine marking credits and figured out a system. And quarter slots have some of the worst odds possible. Okay. Yeah, they're terrible, right? I never lost after the first 5 sessions. I figured out how to trade them. And I had a daughter who was about 14, and I would bring her up a bucket of quarters. She loved playing this slot machine. And not slot machine, pinball. And I would just bring her a bucket of quarters, go, honey, have fun. I would just bring a whole bucket up, and she would just sit there and just play. And, you know, that was back in the day when you could actually leave a 14-year-old in a lobby and not watch her every second. Right. But the point is, you know, but those you can do a lot. I actually have done coin flipping. I remember sitting there and flipping coins for hours, and my wife going, "What are you doing?" And I'm pointing figure a coin flip, where 1x3 coin flips. You had to get 3 heads in a row. You get an X, all that kind of stuff, right? Mm. And I wanted to see if randomness was predictable. And I would tell you that I've established that there is some predictability to almost all numbers. And I've done such crazy things like that you know, just I'm obsessed. I mentioned I am I'm dyslexic. I'm moderately dyslexic, and it's been one of the best things that ever happened to me in my life. It was a struggle when I was in school. It was always a struggle for me. But man, in this world, it's like I look at a chart, you look at a chart, I see it upside down. And usually that's the right way to look. It does the opposite of what everybody thinks. And while we're charting, you see this market, it's trading down to 7. Look at the hourly chart now. It's all
down into
down into the averages. So, folks think about, well, it's interesting because the market grid did not turn down last hour. It turned up. So we got on. But thanks for that. Those are good questions that you ask. I hope everybody enjoyed those answers. But there's just so much that I talked to, I have a buddy, some of you might know him, Steve Kalasian, and he's got a live trading room he does, and he's an old trader like me, and I talked to Steven the other day after the calls. He goes, Kendall, we're a dying breed, man. There ain't many of us left. I go, I know. I mean, he's an old-time floor trader. I am, all that stuff. I go, yeah, not many of us left. And but there was so much to be gained in the analog world, and there's a lot in stuff. And I don't know if you saw the tweet I did earlier.
No, I don't.
Okay, so I talked about something, and everybody needs to hear this. So I've got a couple hundred people listening, probably 1,000 or more, a couple thousand will listen later. But one of the things I realized, so we're updating our S&P 500 in WaveTech and in Portfolio Expert, and guy working on that job, he goes, you know that we're over 1,000 symbols now in the S&P 500. We update the constituents as they change. Stocks come in, stocks go out. And what I realized is the S&P 500 is not the same S&P 500 we were trading in 2000. The symbols, 100% turnover in the number of the symbols in that database. Now, there's some comment there, but 500 symbol changes since 2020.
That's insane.
So basically, the index, and I was saying this challenges the whole concept of looking at historical data when you're looking at this thing that's in constant flux, constantly changing, and everybody's trying to go, oh, look what happened in 2008. Well, it's not even the same index. So and I do that analysis too, and I'll look at the long-term analysis. But what I argued is that by having this dynamic analysis that I do with WaveTech is what's got me to be the one of the few bullish guys this year, and to follow this market to where it is, and it's still expanding. The damn thing went to 79% yesterday. So so it's 100, as FF just said, 100% turnover in that constituent list, which is insane. And you realize, the snaps fired is, it was actually my son Jason does some work for me, and he goes, we're over, I think it was like 1,002 symbols or something. I'm like, really? He goes, yeah. He goes, you even thought about that? And then, no. And then it just triggered in me this morning, realizing that we're basing a lot of thoughts on these old ideas, and it's my argument that like my buddy Hugh Hendry and other folks that are locking into these old theories. Listen, Hugh's a friend. He's incredibly brilliant man. I mean, probably he was standing in my house in 2010. And I go, Hugh, you're probably the most smartest person I've ever known. But smart doesn't make you good at markets, And what's happened is too much looking in rearview mirrors to trade, to look at what's happening in the world, is not the right way to do it. You got to look forward. I mean, I'm like a huge advocate of AI. I mean, I'm working on a project right now. We're going to incorporate AI into identifying characteristics of traders, who you are as an individual. We got a crazy plan, and ChatGPT has changed everything in a big way, and that's just the beginning, tip of the iceberg. And so, I think all of these things, you have to look forward and not look backwards. And I feel like I do a pretty good job for an old dude staying on top of crazy
Absolutely.
stuff. We started ChatGPT in December. I found it, and one of the guys on the team, he's been with me for 12 years. I go, dude, you got to check this out. Look what I'm doing. And that was, so it's pretty amazing stuff what we've done. So anyway, okay, I'm way off on another rabbit hole, but
thank you, cheers, Bob. That was very in depth. I appreciate the clarification earlier, and interesting story.
Yeah, so I will let everybody know if nothing else, maybe a meet and greet at a pub or something. We'll have some drinks together. If a bunch of people respond, George wants to do an event at the university for outside people as well.
Okay.
So that might be where.
I'd be keen.
Yeah, that might be what happens as well. So, and George and I'll probably tag team some stuff and when we do that event. So anyway, all right. Thanks, Paul.
Cheers, Bob. Thank you.
Same. Cheers. Okay, folks. I hope you enjoyed that. I kind of got on some classic Bob Kindle rants, but yeah. So, but basically, what we were expecting off the hourly chart happened. I'm just telling you, folks. These indicators can really guide you right to it. If you look at what's happened, where we at now, we're a half hour to the next hourly close. My guess is, could be wrong, if we stay down below the 21 on this hourly chart that we're looking at right now, if we stay below that, we're going to see the market grid turn down, and we probably get that slide into the close. Very, very good. Somebody was talking about last month, ES had a monthly RXT. RJ was pointing that out. Appreciate that. Interesting that we, see if we can clear that level. Let's take a look at it. We can do that. Why not? Yeah, so there's that RXT. So that'll be interesting. You're absolutely right, because what does that mean? We should close, we should go sideways for 2 months, and that would put us into the end of this third quarter, sideways to down. And if you look at the slope, I'm going to change a couple things on the, so we can get some algo predictions here. Once we get to the end of the month, we got another 10 days or so. We get in, we'll have the Fed behind us, a whole lot of stuff. So it's going to be very significant when I go through the next the next longer term update on what's going on with the markets, because I think there's definitely some things going on. And like I said, the database just continues to expand. And when we get the database on tonight, when we run the intermediates, that's probably going to be some interesting numbers. I expect to see go from 70% to some higher number. I think we get a positive rotation. I mean, we're trading what? Trading almost 4,600. I mean, we should see more stocks get sucked into the bullish percent here. So what I'm going to do is I already have these set at 50. I'm going to go to, I don't know how. Let's see. I don't know what kind of sampling we're going to get. I'm just trying to get, Yeah, I finally got some to work. So let me, this is, let me change this. We have to change the coefficient back to 50 instead of 150 on the look back. And we'll get some, just want to, and bear with me while I change a couple of these numbers here. Just get a couple of these so we can get a feel for it. So we're changing the on the PPM3s, we're just changing those out, and it's probably worth, yeah, it's going to be probably worth going in here and doing the changing all this stuff. So bear with me. It's going to take us less than a minute. We're just changing the coefficient look back so we have enough bars. So anytime you see something, I saw somebody send in even an email or somewhere I saw it, is if you're not getting calculations, the chances are you don't have enough data. When you do like a monthly chart, if I went to S&P Cash, I'd have plenty of data to do that. So let me just do this last one here. So, but what you can do, if you don't have a lot of data available, you can change that look back coefficient from 150 back to a smaller number, and at least they get a sample accuracy. Don't know about that, but at least gives you a feel. And you can see here, and this goes along the lines of what RJ is talking about, is you start to get some of these. I'm missing one. Bear with me a second here. Let me change this one to this will be helpful. Okay, so yeah, so we start to look at the monthly. So we did get the RTX sell signal. We could go sideways into this 10-month moving average. It looks like forecasting wise for right now, it looks like it's stable. And then you look at PPM2 is starting to be forecast up, and PPM3 is rounding. So if I were to, I could draw this in. You can see where this bottom average is just kind of flat, is slightly up. The rest is a PPM1, that angle of attack. This is what we just watched on the 5-minute chart. So I'm going to suggest to you folks that you can learn so much from these smaller increment charts. I love 1-minute charts. Make sure that the chart is orthodox looking and that there's predictability to it, meaning there's classic patterns that you look at, that you see on every chart you look at. If you have that market, ES is a great one because it's so liquid. But whatever market it is, make sure when you can learn a lot from watching these things and picking up these formations, watching how these things happen. Like I said, I've gotten completely crazy. I put up a 5-second chart for one day. It's just I wanted to see if I was testing these indicators. I want to see if they work. And I'm sitting here watching them going, whoa, wait a minute, there's something here. So that's how I ended up down that rabbit hole. And so, what RJ's talking about here is we did get that. Maybe we go sideways. We're still positive. Where did we close at? Last month. Let me bring up the close. I closed 44.88. So we probably won't close lower. That would be somewhat shocking. That'd be a 100-point drop in the next week. This is possible. We have the Fed and everything else, so we'll see how that goes. But we shouldn't end up going sideways. Chances are, if we stay at these levels, we might see that channel that's on the market grid continue higher. And so then all of a sudden S1, S2s are going to be a little bit higher than where we are right now. So you probably have an upward slope and some of the key numbers. But I'm going to go through the analysis. Yeah, I do. Trader S, yes, I do say STX and Mina RTX. I do that. Dyslexia strikes about every 10 minutes for me. So I appreciate that. But yeah, but these patterns are pretty significant. And I think I even made, since we're looking at this, there's Fibonacci targets on the upside here. that are really, really big. For instance, 6,100, 7,100, just round numbers, 7,700 on the S&P. So it's pretty insane numbers. So I don't know. Is that when they take Joe Biden out of office? I don't know. I don't know what's going to happen there, but maybe that's the point. But yeah, so yeah, just a lot of stuff. So folks, I went a little longer than I meant to go. I've got some other things. I'll tell you what, if there's, let me just see, there's no questions on Twitter. So if I'll take one last question on if you have anything, and then we'll just I'll come back on screen and we'll wind this thing down. Okay, folks, that was fun. I hope you enjoyed it. I got in a couple little rants there, but just in closing, if you haven't got the indicators, get them. They're amazing. There is a class that goes along, so you have all the basic understanding and how to use these things. And I'm going to keep doing this stuff. I enjoy it. And what I'd like to do, and maybe we'll even meet on Discord. There's a couple things I just want to point out as far as the Discord channel goes, and make sure we get that type of interaction going. I'm spending some time on Discord every day. Today I have not been on. I've been here with you folks, but try to put some questions up there, and we may do even some live chat like this. I'll put a channel together that we can talk on. I think right now the channels we have out there are text only, and I'll see if we can. There is one channel I think that we were originally doing for the live room that I'll try to get engaged with. I just got a lot of stuff going on right now, and it's difficult for me to be there on a regular basis. And I think what I've seen from the community so far, people that have been very supportive of each other, no weird stuff going on in there, and I appreciate it. And I just want to thank the folks that came up on Twitter. I appreciate it, because everybody's, I got to tell you, a lot of no weird people around this channel, and I appreciate it. Whether we have 1 million users, I saw a comment, it was on YouTube, I think last night. Somebody said, I don't think the world could handle Bob Kindle having 1 million followers. So that'd be kind of interesting. That was funny. I think I know how to interpret that, but it seemed like a pretty nice comment. But anyway, folks, thanks again. We had a pretty good week. Markets next week is just going to be just total fun. I mean, I don't know if you're going to be able to have any more fun than we're going to have next week. That's going to be tough to beat. So guess we'll close out here. I'm just looking at the Twitter to see what's going on there. But anyway, have a great weekend. Thanks for hanging out with me, and hopefully you enjoyed some of the rants and all the stuff that comes up. But it's actually, I should probably just do a Q&A just one day, and we just go to wherever we want to go. And I like doing these spaces. It just, like I said, it's time. There's not much of it, so very limited. So anyway, folks, have a great weekend. We'll see you Sunday, same time, same station, 6 o'clock Eastern. Have a great day. Thank you, everyone. Have a great weekend.